All right, everybody, welcome back, and we're going to continue our video series today on the top 10 things you need to know before getting your VA home loan. And this is video number 4 today, and today we're going to talk about what types of property you can actually buy by utilizing your VA home loan. So the types of property you can buy using your VA home loan are pretty straightforward. You can buy what's called a single family residence, which is a house that's not connected to another house, and you're going to live there as your primary residence. We can also buy manufactured homes, multi-family units, which is a duplex, triplex, or even up to a 4-unit property. And we can also buy townhouses and condos. So I'm going to break it down for you on each one. Hey guys, if you haven't already, make sure you like and subscribe so you continue to get updated when we have some good videos coming out with updated information on the real estate industry. So let's jump right into it. So the type of properties we can buy, let's talk about this first one, a single family residence. All that is just a regular stick-built home. That's a house that you're buying. Now here's the big caveat with VA loans. They have to be what's called owner occupied. What that means is you're gonna live in that house. You're not going to rent it out. You're not using it as a vacation home, as a second home, any of that sorts. That is going to be the house that you and your family live in, and you or your spouse or someone that can take up that occupancy that is allowed to with the VA loan is going to be occupying that house within 60 days after closing. That's the big caveat with that. With a VA home loan, they're for owner occupied purposes only. So when you move into that house, you need to be occupying it within 60 days after you close and finalize on that loan. All right, so let's talk about the second type of property that you can own with a VA home loan, and that is a condo with a VA home loan. Now here's the thing, that condo has to be approved by the VA. Now the VA list, as opposed to an FHA approved list for condos, is a lot larger, and it's a lot more easier to go through the condo approval process on a VA home loan. So a lot of people all the time, they'll ask, hey Aaron, is this a condo or a townhouse? And what we're looking for on a condo is, generally speaking, a condominium owners, they're going to have an individual unit within a larger complex that's going to be associated with different condo association dues, things of that nature. If you own a townhouse owner is typically, they're probably going to share a wall with their neighbors, but they're going to own the structure of the home itself and plus the property and the surrounding land. That's the biggest difference between a condo and a townhouse. The biggest thing that we want to do to determine the two is actually look up what's called the prelim on the property, and what that is that's information we get from the county tax assessor, and it's going to have the actual legal description of that property. Now, if it does come back that it's a condo, piece of cake. All we do is we go to the VA approved condo website with the name of the condo association, and we look for if that condo is approved or not on that list. If it's not, there's some steps that we can do. Don't fear, there's some steps that we can do to send that information off to the condo association to have them fill out that information, get it back to the VA, and look at getting that condo approved and updated on the website. So what are some of the requirements to have that condo be approved by the VA? Well, the first thing is we want to make sure that at least 50%, at least half of the people that are living in that condo association are actually owners of their condo, meaning they're not renters, they actually own that condo and they're living there. VA wants to make sure that at least 50% of the people in there are owning their condos. Typically, it's just human nature. We find that people take better care of something that is theirs as opposed to being renters. Another big caveat too is they want to make sure that at least less than 15% of the unit owners are behind on their homeowners association dues. So we don't want any more than 15% of anybody that lives in that condo being behind on their homeowners association due. If it's a newly constructed condo development or projects recently converted from apartments, at least 75% of those units must be sold. And then also the project must consist of more than one unit. So you just can't have a condo project that has one condo. It's got to have at least more than one unit. And no single entity, individual, investor, or company cannot own any more than 10% of the units of development. So that means if there's 100 condos in there and someone owns 20 of those condos, one entity owns 20 of those condos, it's not going to be eligible. So they don't want more than 10% of any any one entity, investor, or an individual owning more than 10% of the condos in there. Now with condos, we also have 4 different types of requirements or 4 different types of approvals that we get. The first one is called accepted without conditions. And this is actually the absolute best one. That means you can proceed with your VA loan as normal, just like you were buying a regular stick-built property. There's nothing, any extra stuff that we have to do. It's treated just like a regular purchase. That's the best type of thing that we want to have. Next is accepted with conditions. Now that means that VAs approve the complex. However, there could be some concerns with one of the major things that we discussed earlier with the complex's application. For example, one person may own almost 10% of the units, but not quite. So they're saying, okay, we're still going to approve this complex. However, if this happens, then it's not going to be approved anymore. So that's what accepted with conditions means. Then next we have what's called HUD accepted. And what this means is historically the VA accepted any condo project that was an FHA approved condo project, and they went ahead and just kind of grandfathered it in with HUD. And then finally we have unaccepted. That's a unit in a condo community that is unaccepted. It's not eligible for VA financing at all. So next let's talk about townhouses. Townhouses are awesome. It's just a lot of times there can be some confusion between the listing and what the actual prelim or legal description of that property pertains to. I've seen properties before where it's listed as a condo, but it comes back as a townhouse. That's what we want. If it's a townhouse, it gets treated just like a single family residence. There's no extra hoops to jump through, any of that nature. So townhouses, they get treated just like a regular single family residence. So what about multifamily units that we talked about earlier? So this is something that's really neat with VA home loans, and this is actually something I encourage younger homeowners to do now. I wish I would have known this when I was younger, but this is something we actually encourage our younger homeowners to do, first-time home buyers to do. You can actually buy a multifamily unit up to 4 units. So that means you could buy a duplex, you could buy a triplex, or you can even buy up to a 4-unit property. And the caveat is you have to occupy one of those units for at least a year. So just like you're buying a regular house, but you're gonna live in one of those units and the other 3 units are rented out in this example if we're doing a 4-plex. Here's what neat. VA allows us to help use the rents of those remaining 3 other properties to help you qualify. So if you're a first-time homeowner or a first-time home buyer and you have your VA eligibility, this is something that you might want to look into because it's really neat. You only have to live in that house for a year. After that year, you can now rent out that 4th unit. You've got yourself an investment portfolio started. However, remember the big caveat is you have to occupy one of those properties in that unit, that multifamily unit, for at least 1 year. So finally, let's talk about the final type of property that we can buy with a VA home loan. And that's a manufactured home that we can do with the VA home loan. Now, a couple caveats about this. Up until a few years ago, VA never used to really care about the age of the house. And about probably 4 or 5 years ago now, they actually came out and they actually follow suit with FHA's requirements. So the home has to have been built June 15th, 1976 or newer. This is for manufactured homes only. It has to be on a foundation and it has to be classified or converted to real property. So that means you can't do a VA home loan on a manufactured home that's in a park. If that's classified as personal property, VA will not insure that manufactured home. So again, for a manufactured home, it's got to be June 15th, 1976 or newer. It's got to be converted to real property and on a permanent foundation. That's the biggest caveats with a manufactured home. Now let's talk about what I call the 3 S's that they look for in every single property. That's safe, sound, and sanitary. And this is going to be addressed in a later video, but this is one of the big myths about VA loans is the appraisal's more stringent and strict. They're not. They just want to make sure that that house is safe, sound, and sanitary for the veteran and their family when they live in it. So it's very easy. So obviously, no broken glass or windows. We want to make sure all the smoke detectors are working properly. If there's paint that is chipping, that's got to be fixed and taken care of. They don't want any little kids taking in and eating paint chips. That's just the fact of it. If there's a hot water heater, it's got to be safely strapped and secured. Those are the biggest things they look at. So they want to make sure that the house is safe, sound, and sanitary. That's what that. So hey guys, there you have it. That's the 4 different types of properties you can buy with your VA home loan. Again, a single family residence, a condo, a townhome, multi-family residence, so you can get up to a 4-unit property. Again, just make sure you're living in one of those units, and then finally manufactured houses. Guys, thanks very much for watching. Make sure you stay tuned for our next episode in the top 10 things you need to know before you get your VA loan. If you haven't already, please like, subscribe, give us a comment down below, and we'll talk to you soon. Take care. Bye-bye.